House versus stock market. Which makes you richer? Imagine two friends. They both have $100,000. One buys a beautiful house, the other invests the same amount in the stock market. Fast forward 30 years. Who ends up richer? Most people immediately answer the homeowner. But what if that isn't always true? History shows the stock market has often outperformed real estate. Should you buy a house or invest in stocks? The answer isn't as simple as you think. Let's break it down. Part 1. Why people love buying houses. For generations, buying a home has been considered the ultimate financial goal. Parents tell their children, stop renting, buy a house. It feels safe. You can see it, you can live in it. Unlike stocks, your house doesn't flash red every day showing its value. That emotional comfort makes real estate attractive. As property values rise over time, homeowners build equity. Instead of paying rent every month, they're slowly owning an asset. Many people also believe houses never lose value, but that's actually a myth. Housing markets go through crashes too. We've seen it happen many times around the world. A house can stay flat in value for years, sometimes even decades. Selling a house takes time, paperwork, and thousands of dollars in fees. Real estate feels stable, but it's not risk-free. Part 2. Why the stock market creates more millionaires. Now let's look at stocks. When you buy stocks, you're buying tiny pieces of businesses. Every time companies grow, your investment grows. Over the last century, the US stock market has returned roughly 10% per year on average before inflation. That might not sound exciting until compound interest starts working. Imagine investing $500 every month for 30 years without doing anything special, without finding the perfect stock, simply investing consistently. That money can grow into hundreds of thousands, even over $1 million depending on returns. That's the magic of compounding. Your money earns money, then that money earns even more money. Albert Einstein supposedly called compound interest the eighth wonder of the world. Whether he actually said it or not, the idea remains true. Time is the investor's greatest advantage. Part 3. The hidden costs. Nobody talks about when people compare houses and stocks. They often forget something important: costs. Owning a house isn't just paying the mortgage. You also pay property taxes, insurance, repairs, maintenance, roof replacements, plumbing problems, painting, landscaping, unexpected emergencies. These expenses can quietly eat away at your returns. Now, compare that to owning a simple low-cost index fund. There are almost no maintenance costs, no broken roof, no leaking pipes, no surprise repair bills. Of course, stocks can be volatile. Prices can fall 20%, 30%, or even 50% during market crashes. But historically, the market has always recovered over long periods. The biggest mistake investors make isn't buying during crashes, it's selling because they're scared. Part 4. What about leverage? Real estate has one huge advantage: leverage. Imagine buying a $400,000 home. You only put down $80,000. If the house increases to $500,000, you've gained $100,000 while investing only $80,000. That's powerful. Banks rarely lend you hundreds of thousands of dollars to buy stocks, but they'll gladly lend money for a home. Leverage can multiply gains, but it also multiplies losses. If home prices fall, you still owe the bank. That's why borrowing should always be used carefully. Debt is a tool, not a guarantee. Part 5. So, which one wins? The truth is, neither investment is automatically better. A house provides security, a place to live, emotional satisfaction, and potentially long-term appreciation. Stocks provide liquidity, diversification, lower maintenance, and historically strong long-term returns. Many wealthy people don't choose one. They own both. They buy a home they can comfortably afford, then consistently invest in the stock market. Because real wealth isn't built by choosing one asset, it's built by owning multiple appreciating assets over time. So, house or stock market? The answer depends on your goals. If you need a place to live and can comfortably afford it, buying a home can be a great decision. If your goal is maximizing long-term wealth, consistent investing in the stock market has historically been incredibly powerful. The best investment isn't the one that makes you rich overnight. It's the one you can stick with for decades. Because in investing, time usually beats timing. If you enjoyed this video, subscribe. Thanks for watching, and I'll see you in the next one.